Hello everyone, I currently hold 100 shares of United States Oil Fund. I bought these shares back in April 29th of this year. I bought them at an average price of $17.91. So in this video we will talk about what is United States Oil Fund. Why did we choose to invest in this ETF about a month ago? Why did United States Oil Fund drop in price about a month ago? And then we got some really interesting news lately. What are they? And then in the end I will talk why am I possibly selling all of the USO shares soon. Before we move on, please leave a like for the video, subscribe to this channel, and once you listen and watch this video, please leave a comment down there and let me know what do you think about this ETF. Just keep in mind that this channel is not a financial advice channel, nor do we intend to be one of them. We are just sharing our thoughts, research, and opinions on these specific topics. So what is USO? So the United States Oil Fund is an ETF, so is an exchange traded fund that pretty much tracks the daily price movements of West Texas Intermediate light sweet crude oil. This fund is designed for short-term investors who can continuously monitor their positions and who are bullish on short-term futures contract on West Texas Intermediate crude oil. Sounds like a risky play, so why do traders choose this fund then? So the main reason why traders would use this fund is to gain access to the physical market of oil. Keep in mind that it is very costly to physically participate in the oil market. So physical market participation requires significant infrastructure investment, storage tanks, pipeline distribution facilities, and many other things. Since USO invests in oil futures, what are their main differences between futures and the ETF? Therefore, some advantages of futures over ETFs include: number one, there is no management fee. Number two, roughly 24-hour trading access. When overnight market events such as elections, weather, or any other events impact oil prices, there is no delay before you can trade, unlike waiting for the ETF to open in the morning. Number three, many oil or energy ETFs use futures to provide market exposure. Number four, which is a really interesting and one of those points where you have to remember if you are involved with these kind of ETFs, is that when NYMEX, West Texas Intermediate Futures roll approaches, oil ETFs often lose some of their correlation to the underlying market, which can inflate your cost due to slippage. This graph shows the West Texas Intermediate oil price. We can see from this graph that from September to around February, the oil prices were ranging at around $50 to $60 per barrel. However, as soon as the lockdown started because of the global health issue that we are still currently facing, there was no demand for oil, so oil prices sharply fell to really low levels. And there was a day when the oil prices went negative. This graph shows that around April 20th, that's when the oil market actually crashed. However, oil prices have rebounded since their April lows. Right now we can see that the West Texas Intermediate oil price is trading at around $35 per barrel, which is very high compared to its April lows. This makes sense because as countries are opening back up right now, there is a higher demand for oil. A higher demand for oil will definitely increase the price of oil. Because USO ETF closely tracks the West Texas Intermediate oil prices, as soon as the prices started falling, we could see that USO also experienced a drastic decrease in price during those times. Keep in mind that this fund was trading at around $100 per share in the beginning of this year, and then the price of this fund went as low as $2 per share. At that point, the management was forced to do a split of 1-to-8 split on April 29 because the management was afraid that they might be delisted from the brokerages. Therefore, once they did the 1-to-8 split, the stock opened at around $16-17 the next day. Because oil prices have seen a really good recovery from their low levels, USO also has seen a really good recovery, especially since after the 1-to-8 split on April 29th. So the stock opened that day at around $17 per share. However, right now it's trading at around $26 per share. Unable to physically buy oil and store it somewhere at those very crazy low prices, retail investors found a better way to invest in oil markets. They started investing in USO Fund. By investing in USO Fund, they had kind of a direct exposure to oil markets. They all invested in this fund because they all knew that oil prices were not sustainable at around 10, 15, not even $20 per barrel. Right now, oil prices are going at around $35 per barrel. In long run, this is still not sustainable. So this fund had the potential to go even higher than this. Until the news that USO has just filed a crazy update to the SEC came out. This news is absolutely not good for USO Fund. RBC, or Royal Bank of Canada, and other market participants, including other futures commission markets, have taken risk mitigation measures that constrain USO's ability to invest in the benchmark futures contract and other oil futures contract. This article also states, and this is very important, RBC, currently USO's only FCM, has expressly informed USO that until further notice, USO may not hold positions in the benchmark futures oil futures contract, and it may not repurchase or purchase any other oil futures contracts for USO's portfolio through RBC, whether or not such purchases would be within the limits permitted by the exchanges. On the other hand, USO does not know when or whether RBC will remove these limitations. However, what's good to know is that USO has been constantly trying to enter into additional FCM agreements, so for the purpose of the purchase and sale of benchmark oil futures contracts as well as other oil futures contracts. However, as of today, USO has not been able to enter into an agreement with any FCM other than RBC, and it cannot predict with any certainty when it will do. So in case USO cannot find any other additional FCM agreements to buy and sell all of these oil future contracts, there is a possibility that this fund has to liquidate everything it has, and it can pretty much go to zero. About 2 weeks ago, we made a video on if USO will go back to $100 levels, which was back in January of this year, assuming that oil prices will show a quick and healthy recovery. We concluded that this fund will not be able to go back to their $100 levels even if crude oil prices go back to $100 per barrel. And that is because USO incurs a lot of rollover costs. We also concluded that USO Fund has the potential to go to around $35 per share, if not even more. And that is assuming that there are no fundamental changes to this fund due to the fact that they made some very solid structural changes to their portfolio recently due to this whole oil issue that we experienced. As we saw in this video, we all can agree that there is a fundamental change to this fund right now, which makes the fund very risky, and we believe that the fund might not go anymore to $35 levels due to this whole issue that is experiencing with Royal Bank of Canada. Considering all of the issues that they have been experiencing, and they are still experiencing, especially the one with the Royal Bank of Canada, my thesis is not valid anymore since we saw that there is a fundamental change to the fund. Therefore, I do not believe that this fund might go to around $35 per share unless the management takes really serious steps in finding an alternative solution to the issue that they are facing with Royal Bank of Canada. Therefore, I believe that in the next coming days, I will sell all of these 100 shares, which I will probably lock in a decent profit considering that this was not a big position. Alright everyone, thank you for watching and listening to this video. Please leave a like to the video, subscribe to the channel for future videos, and I would love to hear your opinion and thoughts on this specific topic by commenting down there. Thank you so much.